Good afternoon and welcome to this week's Halftime Talk. We're thrilled to be joined by one of our regular commentators, Peter McGuire, CEO of XM Australia. Peter, thank you so much for joining us on this nearly final Halftime Talk of 2020.
Well, good morning, Sean, and greetings from Sydney. A lovely day here, and here we are, the 8th of December. Who would have thought, what we've seen this year? It's been absolutely, I think everything's been offered. There's no surprises. We've seen it all. And let's just see what happens over the next 3 and a bit weeks leading up to the 31st.
Well, this is the day in my home country of Ireland where everybody downs tools and officially Christmas begins on the 8th of December. I'm not sure that's the case anymore, but it was when I was younger. But Peter, let's just kick off and reflect on the year that was. I mean, this clearly a unprecedented, all of the adjectives and adverbs you want to grab a hold of. But from a macro point of view, the financial markets as a whole, the macro economy as a whole, we end the year. What's your sort of top sort of reflection, top 2-3 reflections do you think that you take forward?
I think the concerted effort, well, first off, as far as the recovery phase, we won't, the pandemic in itself is, you could talk for 3 weeks on it and still just be at the surface. Where did it originate? How did it, reach across the tentacles of the world? But if I look at it a macro view as far as economics, the concerted effort from central bankers globally they realized the devastation with GFC. They weren't going to make those similar mistakes, or in the sense of being slow to act. It was a concerted effort within days, not weeks. It wasn't a Hank Paulson story. Well, we're talking on this, we're doing that. It was more or less, it's game on, and this is what we're doing tomorrow. And that really demonstrated itself, Sean, from that latter part of March when markets just went onward and upward.
I mean, if you take that point, a lot of commentary out of COVID, this 2020 COVID-induced pandemic, etc., has been the acceleration of everything. Now, prior to February, March, COVID taking over our lives, we were already at the end of a 10-year cycle of quantitative easing, of extremely loose monetary policy, and most of the world had already gone to near zero interest rates, and etc. So my point ultimately is what we got over COVID was simply a doubling down of a cycle that's been long underway.
Yep, absolutely. And it was just a continuation. But more importantly, the steroids, they even put some growth hormone in there and they got, a sub 9-second 100. The acceleration and the commitment was unparalleled. We've never seen that sort of action. And I think that's what really took traders by surprise, that things happened so quickly. The sell-off as equities, the crash going back to mid-March, it was just unheard of. The US dollar went through to 103. You looked at a chart and saw, the direct movement. There's the US dollar up here and there's the Dow down here. And it was traders were lost. People weren't understanding. And I think that was the nervousness and the fear that gripped the market so intently and so intensely. And that's what really positioned central bankers to say, hey, this is an unknown. Let's just act and act quickly.
I mean, it seems one of my takeaways of the year has been that the inevitable recession that was going to come from what has been a 10-year bull run was essentially averted, or at least made a very short experience in the financial markets because of COVID. Saved the financial markets in a way. It made that V very sharp, but ultimately that the end of the bull run was going to come, and COVID essentially made it short-lived. What do you think of that thesis?
Well, in some ways, you're probably very right. And that injection of trillions of dollars as far as stimulus re-engaged everything. Yes, we're at the end of a very, very long, protracted bull market. The Dow, S&P was just, one-way traffic for so many years, and all the other equity markets across the world. Pardon me. And it was a point we had record low unemployment in the States. As you mentioned, interest rates at all-time lows. Where were we going to see the next challenge, or how were we going to move forward? Were we going to have a recession? Was 2020 or 21 going to look a pretty tough year? Remembering that going back to this time last year, very much on everyone's radar was still the Brexit bubbling away here. What's happening with the US election? There was still a lot of large theme events that were yet to play out that really were overshadowed completely by coronavirus.
I mean, there was a period pre-COVID, the year or 2 years, in which the Fed and under Powell, Chairman Powell, was attempting to bring the financial markets and economies back to some sort of familiar normal. Interest rates went up, I think it was over 2018-19, 4 times. And then obviously he backed away from that. But ultimately there was a time in which there was an attempt to return to something pre-2008-9. A structure that was familiar to us. We're of an age that maybe those pre-period was interest rates average at 5%. You can save a bit of money and get a return, etc. But through the COVID, it seemed Powell gave up with the idea of revisiting the old paradigm, and that we're now facing something completely new and different.
Well, exactly right. In that time, of course, Sean, that we had inflation taking off, that was just a tightening cycle. Powell was leading the way. The Aussies did the same here. Interest rates were creeping up. It was just a typical cycle expansion. And all of a sudden we had to contain it a little bit. And out of left field presented the perfect storm for a trader. Who would have imagined crude oil, really, $38 negative for a barrel? I know it was because of holding, and there are many arguments to that, but what we saw in that March to April period, and of course the uncertainty, and that gripped Japan, gripped China. What was the truth? What was the unknown? Easy to look back now and say, well, this is what we experienced, but my mind goes back to Lombardy in Italy. I go back to those horror stories, what you'd see on TV, Spain, Italy, France, and that really certainly created the fear aspect, and that's what I think really accelerated the precision of central bankers.
Can we ever now, I suppose I'm coming to the big question, can we ever now get out of this cycle where monetary policy leads the financial markets? I mean, strangest thing, seeing Jamie Dimon, CEO of the biggest investment bank in the world, screaming at the government because they didn't come up with a second stimulus package. I mean, here's a banker, an investment banker and a billionaire screaming at the Fed, or at the fiscal side of the US government, because they're not printing more money into the market. I mean, it just seems that we're in a permanent distortion, and that the financial markets cannot behave or cannot perform without a massive monetary wind in their sails. I mean,
well, that's exactly right, Sean. I mean, this has been a stimulus-led rally, a tsunami, bazookas nearly every month. We've got ECB coming out this week. The only reason that anything's going to be derailed or be a little bit fractured would be if they underwhelm or over-deliver. So that's the first part. We've got the trillion or more coming that the Fed are going to say they're going to kick the tin. There's central bankers that are just looking at, what do they need to do to make traction or to get a re-engagement. We're looking at the unemployment story. I hear what Jamie Dimon's saying. There's nervousness still on Main Street and Wall Street. Are we fully cooked? Are we sitting here with a perfect storm going, well, hang on a second, you didn't see that happen. In 2 weeks' time, the Dow's down 15%. You go, what happened?
Well, it just seems to me, if we're in a world where we can all print money all the time and savers get slaughtered, there has to be a day of reckoning. It hasn't arrived, and maybe we'll look forward in our next section. But the other big story for 2020 for me, Peter, and you're sitting a lot closer, is China has arrived at the top table, at the top seat at the top table. Obviously, they were already at the top table, but clearly they've elbowed everybody else out of the way, G7, G6, G5, and they are clearly now sitting right alongside the United States.
You bet. Yeah, there's no doubting where they're sitting. And and the growth over the 2020s as far as global GDP and their percentage is just going to be astounding. So yeah, they'll have the mantle within the next 4 to 5, probably, or maybe a fraction longer into this decade as far as the #1 economy of the world. And
do you think in any way they've overreached this year? I mean, there's a certain sentiment that they are fighting fires on many fronts: Hong Kong,
oh yes,
Taiwan, India, US,
Australia. Australia, from a commodity standpoint, Sean, we've got 7 or 8 commodities that they're highlighted, from lobster farmers, and they're stuck on planes, coal sitting on ships, red wine, that some of the best red wine in the world, and that they've denied access to that market. They're still taking our iron ore, rubbing their hands together as far from infrastructure and the build story. So, and Australia sits well from a geographic standpoint because we're a lot closer to China naturally than Brazil for iron ore. And from the coal issue, well, we don't export that much to China, but they've got their own internal issues as far as transportation from the north, getting it to the south. It's easier to ship it in. So there are issues that, and the complexities of them from a geopolitical stance, how our politicians are going to face that, and the backlash that, remember that you can get a lot of backlash from your voter public, and it's starting to gain a little bit of traction. Main Street, radio, TV, press. What did the Prime Minister say? What did he do? What are they saying in cabinet? So it's starting to create that groundswell, and they've got to be very, very careful how they play that.
Do you think China can manage to have, I mean, if they're a big player, America obviously been doing it a long time, to be, if you like, in a variety of scraps on so many fronts? Have they got that competent?
It sounds a little bit like the old days as far as the US, where it faced 2 oceans, and that's where their navies were both sides. China only faces 1 ocean. The South China Sea is a melting pot in my vision. Philippines, Vietnam, what happens as far as Korea. Don't underestimate Japan in any fashion or form. What's going on there, and of course Taiwan. They're strategic footholders in their, I think it's really rattling everyone's cage in Hong Kong. Who could have imagined that 18 months ago? So I think that there's just so much uncertainty, and this is really, can they fight fires on every front? We're going to find that out. That's one thing we're going to find out. It strikes me that they can,
but I'm not sure that they can do it with a sort of subtlety. It's very what they're calling a wolfhound or wolf diplomacy.
Yes.
But of course, the other big story of 2020, Peter, is oil. Oil has had a major journey, in some ways dramatic, and then in many ways quite boring.
Well, there was probably around about a 2.5 month period, Sean, that it was the deadest trade of everything. Who wanted to be an oil trader? It just was range bound. It was dead. 35 to 43, but there was just no movement. It'd go up $1 here, it'd go down, it wouldn't do anything. And certainly from what we saw as far as that crunch time in March, April, May, June was electric time for a trader. And I think that's the great attraction. And as far as trading, you're on which horse is moving the quickest at that time. And if there's no movement, well, don't look for that. There's other things. I mean, have a look what happened to gold and that US dollar sell-off. So
Bitcoin.
It was, yeah, and Bitcoin, of course, and crypto. So we've really seen, I think, a resurgence as far as oil prices. That they've had a very, very strong November, up 30-odd%. And will that continue into January? I'm still of 2 minds. I think they'll probably consolidate at this point, maybe $1 or $2 either side. I don't see any big breakouts unless we see something dramatic happen. I'm not suggesting from a geopolitical shock, but an unknown that presents itself, which creates mayhem in the market.
I mean, you'd have to say the big story of 2020 on the oil side. I mean, obviously the demand collapse, and as you said,
yep,
at the beginning, we could talk about COVID for 3 weeks and still only scratch the surface. But on the supply side, the OPEC plus 23 countries coming together to cut 10 million barrels a day of oil, inevitably, literally overnight. That was a major achievement.
Well, it was, and that really demonstrated, but they knew from a demand destruction perspective that it was just cratered. So I think that they really, yeah, they acted with cohesion. They acted as a glued team, a single voice, and for that they need to be congratulated. I still, in my own heart, Sean, and you've been there to Vienna, to the underneath the building there, the OPEC building. I've been there numerous times. I still believe that OPEC will be going in 20 or 30 years. It'll see me out. So I don't think it's going to, dissipate and all of a sudden fall off the face of the globe. There is our demand pictures, certainly for Mr. Musk's cars and other forms of electric vehicles, is going to be huge growth. But I don't think that the modern motor car is going to, sail away to some uncharted waters. I think there's still going to be people.
The extraordinary thing of this year ultimately is, and I think that's really a question for where it goes forward. But ultimately, this year, Russia and Saudi Arabia, again, Russia coming to the top table of OPEC, whereas previously they were not a member of that group, that multilateral group, now squarely sitting at the top table. There is no more OPEC doing anything by itself. After 2020, nothing happens without Russia.
Exactly. There's, that's been I think over the last couple of years, and it's just gaining more momentum as every month wears on. It's a big organization. When you strap them together, there is Russia and Mr. Putin and MBS. They dance at the same songbook. I'll go a little bit further. We were talking offline, the situation with Israel and how they've brokered a deal across there. And you were saying a lot of Israelis will be coming into Dubai over the Christmas period. That wouldn't surprise me, but that would have been unheard of. I was in Israel in January, went to Tel Aviv. It was my first time there. Wonderful experience. But what we've seen this year has been, this is earth-shattering.
Yes.
It really is. From a geopolitical standpoint, I've got to say, I would have thought that there may have been some backlash from Soleimani, that issue. I would have thought that there could have been something somewhere from the issue we had last Saturday week as far as the Iranian scientist. I haven't seen any pushback, Sean. And
well, maybe that's a good moment to twist and turn to the year ahead, because inevitably we're baking in the cake, it would appear, a lot of possible black swans, a lot of possible disruptions. I mean, the idea in 2020 where the market bull run basically had a temporary pause in March and the 10-year bull run rallies on. But the big reality, and I think it comes very square here at Christmas, the gap between Main Street and Wall Street is becoming a canyon. And with 12 million poor Americans facing the end of their welfare benefits the day after Christmas, it really is sort of a perfect exclamation point, if you like, to this year, to this decade. And I'm wondering, from your point of view, can the markets continue to flourish with that kind of growing canyon of economic prosperity between Wall Street and Main Street into 21?
Well, first off, if I use the US as a test case here, and we understand from lockdowns and what's happening right this point, it was underwhelming, the NFP, the non-farm payrolls that were released on Friday night. Certainly underperformed and didn't hit what anyone thought may have been, the 500, 600,000 positions. So, and that mid 200 number really shows us that if whoever the incumbent president is on 20th of January, what are they inheriting into 21 as far as the growth engine for that US? I can't talk about Chinese unemployment numbers. Everything's very difficult to look through. Yep. So, but if I look at the number one economy in the world at the moment, are we fully priced, or do we just, by this time next year, if they thrown another 3 trillion at this, or 4 trillion, to try and get more horsepower and keep that booming equity market rally continuing into 22, Sean?
Do you think that in that respect, that if there was to be some element of unexpected outcome, this monetary, now fiscal stimulated recovery at some point has to end, and the real economy has to take over.
Well, yes, and we're getting, but yes to that is the first point. The second point is that money's so cheap, PE ratios, and companies are going to outgrow their expectations. That's what everyone's suggesting as far as performance over the next year and a half to 2 years. The issue that is in my mind, and I've only just come across it in the last matter of hours, the 3rd District issue tomorrow, well, our time is going to be 1 a.m, so your time will be about 5 p.m. tonight. We've got Supreme Court Judge, Justice Alito, looking at the Pennsylvania electors. So that's sitting in my mind going, okay, that could be a little bit of one of those black swan events, because my understanding is of what I've read and listened to, that if he was the words escape me, if he was to create an event and put an injunction in place to those electoral colleges, then that really would create, I think, a great degree of uncertainty, which is risk to the market. And the market at the moment doesn't want uncertainty, Sean.
That would be a flock of black swans. That would be
and it's only in the matter of it's 5 p.m. here. I'm talking in 7 hours time, and I believe that the decision had to be by 12 p.m. Pennsylvania. That's noon Wednesday the 9th, and he's having that court case at 9 a.m. Pennsylvania time.
Yeah, that is essentially the last day of certification for all states. And once that date passes, there's no more legal challenge permitted. Looking forward to the 2021 big stimulus coming, it would appear, 1 trillion now. They seem to be on the doorstep of signing it, more expected in the new year. What does that do for oil, do you think, going into 2021?
I'm going to assume that President Biden is inaugurated, and I'm going to assume that the stimulus is, we get something through by the end of the year, and I wouldn't be surprised if they're throwing their hat out again by March. So I'm concerned from the oil side, Sean, US production. I'm also concerned green energy plans and that whole argument that they're bringing to the table, that I think it's not going to be a savior for crude. It's going to, I think, put a handbrake on as far as those big price spikes back to the 80s and 90s. So as far as 21's concerned, if we can hold these sort of numbers and maybe even a few dollars higher, that 55 to 60, I think that would be absolute sweet spot for the energy markets. I might be wrong, but
for higher cost supply like US shale oil and deep water to come back, which is is a cap in some regards to the recovery of the price.
Well, exactly right. They'll flood the market if they can get to that 55 to 60, and I'm not sure how the Biden administration is going to respond to, the shale side of things. That's again an unknown territory that we're entering, and I won't go down the
given the fractures, or at least the kind of the lack of immediate agreement from OPEC last week, although they finally got there at the end of the week. But clearly there's fractures in the group of 23 countries, as you would expect, in how to taper off these massive cuts. Can they keep this lockstep together, do you think, through 2021, at least talking about the first half?
Well, from a compliance side, I think it's going to be difficult because we don't know how deep how cratered that Q4 is going to look as far as the Northern Hemisphere, Eurozone, US. And then, as far as the vaccine, is that a simple rollout, or have we satisfied everything by April or May? Again, that's the next part as far as that euphoria that was built in to that vaccine Christmas rally feel good. As you know, Sean, there's a lot to happen to make that a reality. And that again impacts crude oil. Crude oil, I find, is it's truly the adrenaline of any financial market. It's the true barometer. People say Dr. Copper. Yeah, copper's good to look at, but truly I think that the blood of the market is very much crude oil. It flows through every trader. You look at that as your first thing. What happened to the US dollar? Where's crude? Then I'll look at, okay, Euro, Dow, DAX, everything else comes off that. But what's WTI? That's it.
I mean, the sentiment at the end of this year brought back the financial traders into the oil markets in a way that they're now seemingly coming increasingly back to the open interest. I'm wondering your thoughts. Is that a big volume of conveyor belt of money that could come back to the oil markets into Q1?
I think so. It's got to show some growth. Either there's got to be a trend, Sean. It's either got to be long or short, and a trader will be all over it. And there's plenty of dollars there because I think that they've done very, very nicely. If you didn't make $1 in the last quarter, as far as equities, gold, oil, you name it, base metals, give the game away. So, and that's even just shorting the US dollar because it's just been one-way traffic. So traders look for movement, they look for opportunity, and they look for breakouts, either up or down. It doesn't matter as long as there's a breakout. And that was the unattraction with crude for so many months in that third quarter. It was just like there's nothing happening. Other markets have got it.
Well, I think we probably have to finish it off there, Peter. I'm wondering, that keeps ringing in my head. 2020 was buy on the rumor, and 2021 might be sell on the news, because it strikes me that you can't have the level of euphoria reality that has been priced into this market. At least that's my unwise view at this particular moment on the 8th of December, which is traditionally the first day of Christmas. So happy Christmas, Peter, and thank you very much for being on this week's Halftime Talk.
Thank you very much, Sean, to everyone and all the viewers, and all the best for Christmas. Take care. God bless.